Hello and welcome to another episode of the Stock Market Today video. It is Friday, September 12th, 2025, and we've got a big week to kind of wrap up for you in terms of the stock market and what was happening. Joining me today, instead of our usual Mike Webster, we've got a special treat. We've got Ed Carson, news editor, Investors Business Daily, helping us out with the commentary today. What you got for us, Ed?
Yeah, it was a long week, but then I'm not used to working a full week, it seems like. Yeah.
Yeah, you usually take your Mondays off. But for anyone that thinks he's a lazy bum, when he takes a day off, that means he only works like 4 to 6 hours instead of his usual.
I can skip the meetings. I can skip the meetings.
And that
But I,
and that gives you most of your day back, right?
I think it does. It really does sometimes. I want to take a look at Nvidia, GE Vernova, Rocket Lab, and a few other names. Obviously, we're going to look at a lot of stuff today.
Yes, absolutely. And before we get there, we'll just go ahead and do a quick recap of the markets themselves. I'm going to share my screen for our market search charts, and we have the Nasdaq Composite looking like it finished up about 0.44%. The S&P 500 basically flat. It was up, or down, I guess, 0.05%. So not much there for the Dow Jones Industrial Average. That one was up for 0.59%, about 0.6%. I'm sorry, down, yes. And the Russell 2000, which was the big winner yesterday, that one was hit the hardest, down a full percent by the close today and falling back below that 2400 level. Now, it's important to kind of note that you have to put some of these in the perspective of the week. It was pretty much up weeks across the board. Some of those very strong, and for the Nasdaq Composite and the S&P 500, that was new high territory and crossing some significant levels for the Nasdaq Composite up above 22,000, and for the S&P 500, we finally got above that 6,500 level this week and cleared it with some gusto. Ed, what is your take on the market today?
Yeah, it's looking pretty strong. Is it like the week everybody was up, the Nasdaq led. It was sort of an AI led rally, but there was more than just AI. So I also think it's really interesting. The major indexes all have now clearly cleared sort of the ranges they were in. I mean, there
Mhm.
was, it wasn't like this clean basis necessarily. The Nasdaq was close to it, but they had these ranges for several weeks and maybe even and now they're clearly above that, but they're not extended. If you look at them, by various measures, they don't look extended, whether it's by the 50-day line or by some other measures. So, I mean, there was the Oracle news was positive. I think the market's feeling confident and about what the Fed is going to be doing, and it's a pretty healthy situation. It's not. I mean, this is a reason not to buy extended stocks,
Yeah,
but it's like
right.
you still got to follow your rules. But this is, I think, a time to be heavily invested, maybe even looking to add exposure, or at least to replace some laggage with hotter things, just as long as you're following the rules. So this, until something comes in the way and you hit the brakes.
Mhm. I also wanted to kind of address the breadth issue because as we've been looking at the market, we've had a keen eye on, for instance, the Invesco S&P 500 equal weighted ETF RSP, and that was something that had a very strong day yesterday. But before that, it was kind of not participating as much. So it almost seemed like, okay, are we back to the Fang Plus, the Mag 7, and so on? That was certainly showing a very different look and much more in line with, again, what kind of drives the index strength is usually coming from these most heavily weighted. But what's your take on the RSP? Certainly it finished the week in the positive territory, but it seems like it's been a little bit of fits and starts here.
Yeah, RSP is like, and you can say RSP even with Thursday was just starting to poke above this range. And really, this range, it's a long range for RSP in a way, but even just in the short run, there was several weeks of trading that it was sort of moving sideways in, and it hadn't really moved out of that. Did on Thursday, pulled back, so it hasn't cleared the way the major indexes have.
Yeah.
But still, it's a close at highs. I mean, it's nice when your laggards are basically moving higher. That was so it is clear that there was an AI tilt, a tech tilt. You can't stock pickers market, but there was a broad advance. I'd say QQEW uh, is the real laggard out there. I mean, that's sort of surprising. It's still been sort of surprising that it's been a tech-led rally and this area has been so weak. It finally got over the 50-day line. It did hold that, but this is
Hmm.
one that has not been then moving into the new high territory. But at least this laggard part of the market, is at least above that key level. I mean, it would only take one good day, and you're right there at record highs. Of course, it would just take a couple of days that are on the downside, and it would be at like 3-month lows. So, um, but yeah, there's the breadth isn't as great there, but it was a broad advance, but it was definitely concentrated in AI, and that's sort of how it's been. AI and these giants. We've had Google, and then Nvidia came on. Oracle's a big cap. Obviously, Tesla had a huge move this week. So a lot of things that, yeah, some of these mega caps really, really leading the way once again.
Hmm. And we're going to get into kind of our overall sector um, kind of look. But before we do, maybe we can kind of talk a little bit about the 10-year Treasury, because certainly a lot of eyes were on the jobs report last week, and then this week, some of those inflation measures to kind of get a gauge on what we can expect for the upcoming Fed meeting next week.
Yeah, the inflation measures were generally okay. I mean, there was some, like the PPI had some unusual weakness. The CPI was mostly in line, maybe some just unpleasant signs. Then there were some other weak economic data. Jobless claims spiked. That there were some unusual things. It was Labor Day week, and most of the gain was in one state. So the 10-year Treasury briefly got under 4%, a 5-month low. It did pop again today. It still fell for the week. Clearly, it's fallen a lot the past couple of weeks and really trended lower, honestly, since almost the start of the year. I mean, and so mortgage rates have been coming down. That's been a catalyst. I will note that the 2-year Treasury yield actually rose this week. Not a lot, but it actually rose, and that's more closely tied to Fed policy. I don't think I don't think that the week's economic data really had much impact at all. We're locked into a quarter point cut. There's a tiny chance of a bigger cut. There's a high likelihood we'll get another 50 basis points of cuts this year after that. Then it's sort of then it's sort of unknown. Not only do we not know what the economy will be like, but we really don't have any idea what the Fed FOMC will look like, because there could be radical changes in by February, March of next year.
Mhm. It's worth noting that, last week what we were talking about is the big shift. Again, it was already pretty much a quarter point was widely anticipated, but after the jobs report last week, it seemed like the 50 basis point cut was coming on strong. It was what, 10% chance or 15%, maybe more. But as you noted, that has shrunk quite a bit this week, down to 3.5 is what I'm showing right now
Yeah.
for the 50 basis point cut versus, again, 96.5 for the quarter. And what about the kind of the rest of the year look? I know that it was kind of looking at like a 75 basis point cut, which looks like that is still potentially um, where a lot of folks are gravitating right now.
There's basically an 80% chance or so of
Right.
a total of 75 basis points by year end, I think. And obviously, a lot can change just over from. Not much is going to change by next week, but then there's plenty of time for the economy to get better, to get worse, et cetera. But that's where it's locked in now. I think there'll be questions about next year. Will the Fed continue to cut rates? Again, there is just a slew of uncertainty with that. But Fed will just take what happens next week with the rate cut and maybe some slightly dovish comments from Powell. That's what the market wants to hear.
Hmm. Yeah, makes sense. Let's kind of shift gears a little bit, and I am going to pull up the. Let me just move some stuff over here, so I've got things where they need to be and sized appropriately. But if we go ahead and take a look at the major players in the sectors, I want to start with ITB, and I do have exposure to housing, but this has been one of those areas that has been kind of tricky lately. It seems like it's going to go, and then it fades a little bit, so a little bit tougher. What's your take on the home builders?
I mean, there's obviously tailwinds. Mortgage rates have been coming down for most of the year. I mean, they have, and they've really come down the last several weeks. Uh, So that's the tailwind. The numbers usually look pretty crummy. You look at the fundamentals right now, and we're going to get Lennar earnings next week. They're not going to be good. They're not going to be good because people are looking ahead to next week. Next several quarters ahead. But so we'll see there. Yeah, there was some negative news. CNM Core and Main
Hmm.
had a disastrous outlook, and they blamed basically the residential market for that. And so home builders only fell a little bit, but yeah, it's there's a little bit of two steps up, one step back. If you go back to ITB, there's a situation. It seems like it makes a big jump, pulls back. It sort of keeps on forming these handles.
Right.
It's sort of done that again and again and again, and so it's been tricky if you buy what the so quote unquote breakout from these handles. I mean, there's only not all of these handles are legitimate, obviously, but it just makes it a little tricky because there's. But I mean, the trend seems to be there. Uh, yeah, obviously the home builders and financials are two of the areas that could be most affected by the Fed meeting, especially if there's some kind of disappointment there.
Mhm. And ITB taking nearly a 2% haircut today after being up, pretty nicely yesterday with a 2 and 3/4 for the week. This was finishing down for the week, but kind of like mid-range for the prior week. So,
Yeah.
um, looking at our 11 sector spiders, one of the more difficult positions was the XLV, which, looking at the weekly chart here, this hasn't really done much. It's been underperforming for quite a while here in terms of its relative strength. And I mean, it's typically looked at as a defensive sector. Certainly, this has been weighed down by some of the heavyweights like a UNH and things like that. It was getting above its 200-day, but that doesn't seem like it's holding.
Yeah, and there's a lot of things like the insurers seem to be coming back. There's hopes for higher premiums and some other things, but they are really beaten down, like you were saying. Some of the medical device makers, I mean, there it seems like there's a push towards speculative names right now, and so it just doesn't seem like there's that time. And there's some tariff concerns with some of those companies. It gets a little. Some biotechs are working, but there's always some biotechs that are working. XBI, I think, is doing a little better. Yeah,
Hmm.
that one is done all right. So you can find areas that are working well, and there's some AI type of plays that are out there, with healthcare. So there are places you can take advantage of things, but yeah, the overall things, it just seems like there's some specific issues to some of these companies and sectors within medical and on the defensive growth side, it just doesn't seem like that. People want growth or even speculative growth right now. It just seems like that's what's in favor.
Yeah, makes sense. And then I also wanted to make sure that we also took a look at the next one in there is XLB, which is the materials. Not much to see here. Overall, still in a downtrend. This recently got above its 200-day moving average line, its 40-week moving average line. Has been trading tight, but not much to see there right now. It looks like XLI kind of in a similar situation, a little bit of a flat base. This does look stronger in terms of its distance above its 200-day moving average line. Anything to note on either the materials or the industrials?
Yeah, I mean, both of them could make some moves, but are they really going to be leading? I mean, especially the materials. This one, aerospace within industrials is doing pretty well, though Boeing is, for some maybe company-specific reasons, is struggling. But
Hmm.
otherwise, there's a lot of names in XLI that are doing pretty well, including
Yes.
GEV. GEV is a big name in that, and we'll be looking at GEV later on. So so that's doing well.
Hmm. Very good. And continuing on, looks like one of the ones that we already talked about RSP, just to kind of get a gauge of where that was falling today. But also, you mentioned growth and FFTY this week. Was pretty good, a pretty strong week here, up 4.2% for the week. For the day, it consolidated a little bit, but really held the gains from yesterday and most of the week.
Yeah, and that was sort of leaving the station even before this week. It hadn't really quite fully done it, but you could see there was more of an upward trend to the sideways nature. Yeah, there's a lot of AI plays. There's some other things in there. There's some even more speculants like some Bitcoin crypto plays that are doing well. There's some big movers in the IBD 50 and the gold plays have done pretty well too. I mean, there's actually a number of gold, so it's gold and AI, and that's and Bitcoin and stuff, and so that's all done pretty well for the IBD 50.
Yeah, I'm going to skip ahead just because you mentioned gold. I wanted to make sure we covered this. It's very rare that you kind of see gold in line with your chips. So here's SMH, the Vanex semiconductor, and gold is right there with it. It certainly had this long consolidation here. GDX, the gold miners, were a little bit quicker to come out of its consolidation, and those are well extended, whereas GLD, the spot price of gold, is a little bit more recent in its move.
Yeah, it does feel like gold and is reading a different script than the tech sector. It's like, I mean, gold is rallying in part because of the weaker dollar, worries about things, and tech is like, what? Why worry? So it is, and there's legitimate arguments for both, but it is interesting to see how strong gold has been, given that speculative growth is doing so well as well. It is strange.
Yeah. I should also mention that again, kind of getting back to our order of the worst first. I'm just going to throw IGV in here because we were talking about how ugly kind of QQEW looked. IGV, which really was kind of having this fairly deep base here, that has recovered quite well and is forming a cup now. Granted, Oracle certainly helped with its huge move earlier this week after earning its earnings report, but that is looking like it's potentially setting up with a little handle.
Yeah, I mean, Oracle and Palantir are the two biggest names in the group. So Palantir took off too. It was sort of first it was quiet, but then it really moved, and it did not slow down at all today. So that's sort of extended now from maybe some early entries. But yeah, those two names after yeah, so still seems to be a fair amount of weakness in software. Oracle and Palantir have done a lot of the work bringing it up, and they're doing that again. So that's one concern looking at that, is that if you were interested in buying it, like SMH, it's almost like so many of the good names are extended. You almost have to
Yeah,
buy SMH, whereas
to,
IGV,
to to get your exposure.
to get your exposure. I mean, if you haven't
Yeah,
got it yet, whereas
yeah.
IGV, and there's things like Nvidia, but that's fine. But it's like IGV, it does feel like there's definitely some dichotomy in there. It's not like a lot of software names are really having a tough time still.
Yeah, and then we were looking, pretty closely at the cybersecurity area for, a while, especially after the April 22nd follow-through day, and that seems like it's still consolidating in the software space.
Honestly, that's held up pretty well given how awful Rubrik's reaction to. I mean, that was just stunning. It beat and raised, but apparently not by enough, because wow, that was a sell-off. I know that. So that's that round trip, that the rally, at least from the buy point from the prior base, down below the 200-day line, just a huge, huge sell-off. I think SailPoint didn't have good earnings either. So the fact that the group did okay, it could have been a lot worse. That did bounce back today, but there's been some that rubric was really a bad break.
Mhm. Over to oil now. XLE, of course, is known for having a real heavyweight in both Chevron, CVX, and ExxonMobil. That's about 40% of the weight of XLE. But even if you look at the equal weighted RSPG, it still looks very similar. So we already talked about gold. What's your take on the black gold?
I mean, oil is not is down. So it's like the oil producers are going to struggle. It seems like there's a few names. Refiners are doing relatively well. Like uh, VLO is doing quite well, is holding that gains. There's some other names like PBF, I think, surged and then came back, but still that seems to be an area because there's been a wider spread. I didn't look at the data today, but uh, a couple of days ago, gasoline was flat for the year while oil was down like 12%. And so the crack spread for refiners had improved. And much like home builders, these refiners have had terrible numbers, but are supposed to have much better numbers maybe at the end of this year and then next year. So that's been the area of strength.
And just for the education component here, what is the crack spread and why is it important?
Well, the crack spread is basically the gap between the cost of what the refiners are paying for crude and what they're getting for the refined petroleum products. And so, what's
Mhm.
that spread per barrel kind of thing? Because obviously they have to, it costs a few dollars to do that to convert it. So, but it's a little bit like with gold miners. A few dollars more in gold means it can mean a huge amount in profit for gold miners. A few dollars gap in gasoline and gold per barrel. And crude and per barrel really is what it's all about for refiners. I mean, that's
Yeah.
what it. So.
Well,
Uh,
and to your point on gold as the example, it's amazing how sometimes a few points down in gold can really change the business pretty quickly for some of those miners. So again, when you're dealing with the commodities and those that benefit from them, there usually is a leveraged type situation for the individual companies. They go up more and they come down more than the typical commodity prices that they're tracking. Okay, getting back on track here with our sectors, XLRE, the real estate, again, just really flat, but at least above its 200-day moving average line. And then I want to spend a little bit of time on XLF. What's your take here? Because this has been another area that seems like a lot of the areas want to go. We've been looking at whether it's the KRE, the regional banks, or your bigger banks with either a KBE or KBWB. It seems like every time it wants to go, but it just sometimes uh, flounders a little bit.
Yeah, I mean, look, they're benefiting from some lower rates. The yield curve narrowed a little bit, so that wasn't great for the banks. But there's still economic concerns, and so you can get hopeful or cautious, and these are very much tied to the economy. Some of the Goldman Sachs and some of those stocks are doing well. Like Goldman Sachs this week came out and said mergers and acquisitions are doing very well, and so you can see how this one have been sort of instead of this one has sort of been trending higher from things and just really made a solid move today. But it seems like traditional banking still just seems to be like sort of holding its place, whereas more of the Wall Street type situations that are doing better.
Mhm. And Staples, as you would expect, not doing great. I'm just going to take a step back here on the weekly, and here again, you might look at this and say, "Well, gosh, it's at least not losing ground." But compared to the S&P 500, which is what this relative strength does, this has been in a downtrend, which you kind of want to see that. If it's people are buying their canned goods, that's usually not good for the market.
Not
That's
great,
usually a
no.
hiding thing.
Yeah, and it seems to be more on the good side. I'd say some of the discounters are doing better. I'm not saying entirely. Like Walmart had a strong week, but I think it's more like your product foods situations out there. I mean, Walmart doesn't beating anybody on the relative strength really, but I mean it's made a nice bounce back.
Mhm. XLK, the technology, again, this is dominated by your Nvidias and your Apples, but a nice breakout that we saw this week and held the gains. So a pretty good looking weekly chart for XLK.
Yeah, I mean this is where the strength is. It sort of bounced off the 10-week line. Again, it's just like big powerful move, new highs, but not extended, which is
Mhm.
nice. It's a nice mix. It's not you do another gain like this, and maybe you're getting there or starting to get there, but not. But it's a very favorable chart.
Mhm. Let's also take a look. We already looked at our SPY, SMH, and gold, but let's take a look at utilities, which again, kind of like gold, it's a little unusual to see it going in the same direction as growth. But we've been kind of talking about how some of these utility plays are a little bit more AI adjacent because of the energy needs of your data centers and so on.
Yeah, I mean when utilities are right, this is more understandable because they're AI plays, and so exactly a number of them bounce back. Honestly, we see a lot of charts like this past week, bouncing back above the 50-day line, maybe breaking trend lines or coming up to trend lines within bases. Uh, so a lot like this. So yeah, um, this your AI defensive sector, I guess. I'm not sure what you want
Right.
to call.
You're AI defensive. XLY, which includes Amazon and Tesla and the consumer discretionary. So no big surprise that because of the move in Tesla, XLY was having a pretty good day. Amazon also set up with a base, although that breakout right now. Seems to be potentially in trouble, but still support at the 50-day moving average line. But XLY, not a bad look with those two doing well.
Yeah, absolutely. Looking good.
And then XLC was the top sector spider of the 11, and of course this has Meta and Google. Google is, I mean, the Alphabet is certainly been, I think, the surprise. The surprise powerhouse for the Mag 7. Really strong action there. But I should mention that XLC, as strong as that was, actually the equal weighted RSPC was even better today with a 1.34% gain versus 0.83% for XLC. So I don't know if some of that has to do with like Warner Brothers Discovery,
Oh yeah.
which was coming up quite a bit. But what's your take on XLC, the communications area?
Yeah, I mean for today, and also, I mean Meta and Google were up, so, they were up slightly today. So they
Mhm.
lagged the overall index. So that's also one reason there. I mean Meta, they have a big conference tomorrow, next week, Connect conference. So that will be interesting. They'll tout their AI, maybe some augmented glasses and stuff. This one's working on a base. It doesn't have one yet. Maybe another week. Maybe the short-term high is going to act as a de facto too low handle kind of for that name. But
Mhm.
that's what's going on there.
And then we have been throwing IBIT into this crowd as well for our sectors. Bitcoin, and I'm going to throw in Ethereum as well, ETHA. I do have a position in both IBIT and ETHA, but what's your take on the crypto? I mean, certainly it's worth noting that we had some crypto news in terms of the Gemini coming out today. There was the BLSH, which is bullish. What is that doing for crypto?
Well, like there just seems to be a push again. I mean, I don't know if it was those IPOs or if it's just a risk-on kind of attitude, and that seems to. And Ethereum really has taken the lead. That one's more harder. I mean, that one's a little bit more delicate. I like on this one. You could have bought it. It's already getting up there versus the 21-day line, and this one is, could see some big swings up and down. IBIT, um, IBIT, that one's going above the 50-day line. That has often been a decent place to buy Bitcoin. One, where you can exit. If it clearly closes below the 50-day line, that could be an exit strategy. And two, it's just like it has these ups and downs, and it's nice to get in there as early as possible.
hmm Let's go ahead and shift gears a little bit and get into a little bit of a discussion of the individual stocks. And we might as well start with Nvidia. It's funny because there were a couple shows that we had on IBD Live where we just didn't get to Nvidia for a while. It seemed like it was almost falling off of our radar. But this gap up above the 50-day moving average line this week and holding is kind of putting this, I think, a little bit more top of mind.
Absolutely, and it does have a weekly, and it'll have a flat base on a weekly chart after in a couple hours. It'll show up, so that'll be a buy point. It's sort of flashed an early buy signal, I think, on Wednesday. I think now you could just wait to get above this week's high, would probably serve as an early entry and still be pretty close to the 50-day line. Obviously, Oracle's news. I mean, Oracle's huge backlog suggests they're going to buy tons of chips. There's all that kind of stuff. It's just that voracious that really boosted that back up again. I think the only real downside, because Nvidia had, they had a negative reaction to earnings, even though the earnings were fine. They maybe just didn't beat by enough. The only thing is that, is Nvidia enough of a leader right now? It feels like Broadcom and Credo and Astera Labs, and those are all extended. Okay, those are greatly extended. But the question is Nvidia gonna, is Nvidia gonna take, sort of catch up to them?
Mhm.
Because these stocks are way out there, or so that would be one issue. Is there going to be a lag issue? And Nvidia has done that before. Nvidia can lag for a long time, even in this AI run. We've had some pretty big pauses for Nvidia. So the idea that it could go sideways for a while is not out there. I mean, it doesn't feel like that kind of market right now, but it just sort of, do you buy what now is probably the seventh best, eighth best, AI chip name, let alone all the other names that are out there? I don't know. That's the only question. Uh, I mean, you can't go wrong, and every fund, no mutual fund's going to look
Yeah,
stupid for
yeah,
buying Nvidia.
yeah,
So I don't want to make it, but I'm just bringing up that it's not that surefire, slam dunk that it was at various times, because there are
yeah.
definitely some stronger performers.
And to your point, there can be, as much as a lot of people will maybe focus on how far this has come from it's 2016. I mean, it's off the chart here. I'm going to just go ahead and go
Sure.
to best fit real quick. But since this 2016 move, I mean, you're up just so many multiples. And for someone that's held that entire time, it's a different story. But man, this has not been easy to hold through some of these very punishing times of either just underperformance versus the indexes, like in here, or downright devastating drawdowns, well over 50%. So,
Yeah, and then there have been concerns, and some of those drawdowns have been like real concerns about the health of AI. Those concerns faded, and the concerns now are not about AI. The concerns are more about, well, is Nvidia not going to do as well as, say, Broadcom? Is there's that push toward custom?
mhm,
Uh, I'm not enough of an expert to tell you how that's all going to work out. Clearly, there's a lot of demand. Clearly, Nvidia earnings are going to be strong for the next several quarters. So
mhm,
it's not like that. I mean, we know that there's a lot of growth. So
mm.
I don't want to be negative. And maybe it will. Maybe now that things have digested, it's like, oh, wait a second, isn't it time for Nvidia to go a run? I certainly would not shock me at all if over the next 4 weeks it rose 20-25%. Because it is setting up again. It's definitely one that investors should be paying attention to.
And it does do that, out of some of these consolidations. So, and AI is, of course, having a lot of influence on energy concerns, because of how much energy. I mean, whether it's cooling down the chips that run about 7 times hotter when you're dealing with your massive computational power here, or just the data centers themselves. So GE Vernova, of course, this is one of the spinoffs. GE, went into the aerospace, the healthcare, and the energy. This is the energy component of that breakup. What do you think of this one? It was certainly looking a little bit troublesome as it was under the 50-day moving average line, but this break back above it is maybe putting it in a different light.
Yeah, I mean, this one is going to have a base as well. It's a 6-week base. I guess it was a little too deep for a flat base before. Yeah, it hit resistance the 50-day, but then it didn't. It did punch through, like just sort of like that battering ram. It doesn't always go through the first time. Sometimes you have to hit that. Can't go through the castle gates after a few blows. Yeah, this one, it sort of flashed an early entry. Now again, sort of like Nvidia, getting above this week's highs would seem to me clear and have an early entry there. Still close to the 50-day line. It would be above the short-term high from a few weeks ago. This is the first test of the 10-week line, so it's an early entry slash just a bounce from the 10-week line, however you want to look at it. So this one again, another one of the leaders. I mean, you obviously, so this is another way to play it. Uh, this one has lumpier earnings for sure, but it has strong earnings. It's so there was a big rally that came in from the spring, couple of opportunities, and this is really the first really good opportunity in a few months to get involved.
Yeah, and when you consider where it's come from the follow through day, here's the start of the follow through day on April 22nd. As you mentioned, it did have this, short consolidation, but at least something for you to trade off of for a potential entry there as well. And now it's still, despite this move below the 10-week moving average line briefly, it is still holding the bulk of the gains from that huge move. Um, let's go ahead and round out the conversation on individual stocks with a power move here in Rocket Lab RKLB. I do have a position in this myself. We also put this on leaderboard, but nice breakout here. It does tend to be a faster mover, but what's your take here? Aerospace defense, but this is kind of a little specialized in the space area.
Yeah, this one, I don't think I would like this ride. It was like, I mean, it's like, it's fun when it rockets. I mean, it is, and look, it's really good. The RS line at a new high. Boy, just last week it had a really ugly sell-off. I mean, it sort of flirted with a buy signal and came right down. I mean, just powered down. uh, but it then, it bounced right back.
11.7%
Yeah,
in a day.
in a
So
day.
yeah.
And I don't think there was particular news. I mean, there might have been something out there, but it wasn't like Rocket Lab is doomed or any kind of news. It
Mhm.
was so really bad move. Came back, uh, made a strong move today, and yeah, this is one again. You can have some of these speculative names. There's a lot of interest in this one. There's a lot of reasons to be interested in this one. But I guess just be careful because your heart may not be able to take it. If you have a portfolio of Rocket Labs, you could be down 10% in a day.
Yeah.
And maybe if we just look at a couple other names, if we could look at Ionic and Oklo. Ionic is in the quantum space, and that one heated up. They had an analyst day today. A few other names went higher. This one maybe you could have argued crossed a trend line yesterday, but there was an analyst day today. It's out there. I mean, this basically, I mean, it has revenue, but I mean, honestly, that's nobody's buying this because it has $21 million in sales.
Yeah.
And it's going to have losses for a while. So someday it will, the hope is that it turns a profit. But this shows you there's sort of a speculative nature to it. Not everything speculative worked today, but an Oklo is another name, nuclear AI play, and AI adjacent play,
Hmm.
and strong week. It's extended from the 50-day line. I guess you could argue it's still in range of maybe the 80 short-term high. There was a trend line, but this one can really fall pretty quickly. So again, I think with something like this, you want to try to buy as close to the buy point or early entries as you can. This would probably have a have a consolidation in another week, but who knows where this will be in a week? This could be 20% above the base or diving towards 60. So I don't know.
Right. And it was kind of interesting to me that, again, you do associate Oklo with the nuclear, but CCJ uranium play, was down today. So certainly wasn't a broad-based nuclear uh, move.
Yeah, that is interesting, and that seems to be. I mean, that's worth watching. It's made a nice move. When it actually has a base and near the 50-day line, because the 50-day line seems to have been a place that's a little safer, because this one often fails after its breakout. Not this last time, but it does have a tendency to do that. But you're
Mhm,
right, not everything went up.
mhm. Okay, so just to kind of wrap up our discussion here, I'm going to show one more chart. We're not going to get to our typical Webby charts, but I do think it's important to make sure that we spend a little bit of time on the regression line. That's something that we've been sharing here. So I'm going to bring up my regression line on Thinkorswim, and this is this is the Nasdaq Composite using May 12th, this gap up that we had. And, just as a reminder for folks, we're using a half standard deviation above the red dash line, a full standard deviation, the solid red line, 3/4 standard deviation below as our green dashed line, and a full standard deviation below as our uh, full standard deviation. And as we noted, as we've been noting on this show for a while, Webby has mentioned how we did get below that green line, which is usually a bad sign. If you stay below there, it kind of tells you that your trend is broken. But because we came right back, this is still intact. So we're still looking at this. The expectation was that once you get back above that line and kind of above this green dash line, you expect to get up to that white regression line. That's the average here, regression line over a 20-day period. So that is the expectation. That's still holding. We kind of would have expected it to happen maybe a little bit quicker, but so far it is plodding along its way. So that's still the expectation there. S&P 500 in a similar way. It's oh, you know what? I think I have my line messed up here. This line should be at 0.75, and I think it's at zero point 0.5. But should be a little bit lower, but it's in kind of that same area where we would expect that to be kind of getting back above that area. And then also, as we've noted, it's a little bit too soon for the Russell 2000. So that's a little bit more of a recent move. So we need more days there before we start drawing our regression channel lines on that one. So we'll tune in next week to see if we're ready to do that. But Ed, you
Uh,
were mentioning before we came on about how one of the overall takes here is that we aren't too extended. So kind of give us your final thoughts in terms of the market and what we should be looking at next week.
Yeah, I mean, I think the regression line it fits in and other things just aren't looking like we're extended. But at the same time, we feel like we're just starting a new leg. All the
Mhm.
indexes are really finally cleared out of that, suggesting that choppy nature that was making new buys difficult. I mean, sometimes they would fizzle, sometimes it would bounce right back, but it was tricky. So that suggests like it's maybe the combination of we seem to be in a clear space, and the fact that we're not extended suggests this is a time not only to be heavily extended, heavily invested, but maybe even stepping on the gas a little bit, both in terms of exposure and maybe how speculative, maybe more aggressive, high octane names. Again, that depends on your personal, risk tolerance and such. That could all change. The Fed meeting is going to be important. But again, we don't have a whole lot of news items out other than the Fed. I mean, there's stuff out there. So there's not the same kind of, oh no, watch out for this. Oh no, watch out for that you just don't know. So it seems like we could have the runway for growth. So I just think that investors should be keeping them on. Again, next week could change all that again, but it just feels like a time to be relatively aggressive, but also just following your rules. Don't go off road. Stay on the road. Don't buy extended. There are opportunities out there. Run your screen so you can find the good opportunities and buying them at the right times, rather than taking added unnecessary risk. You're already going to take on risk, but do it as safely as you can.
Very good. Words to live by, I think, in life and in the stock market. So thank you so much for the comments, Ed. And of course, you can catch Ed very frequently on, maybe a little bit more to talk about when the earnings season picks up on your earnings cheat sheet that you do every Friday. There's still some stragglers there, especially members of the S&P
Yeah, we're
500.
taking a break though. We are
Yeah.
taking a break for a few weeks, but yeah, but yeah.
Yeah, so you can check that out once earnings season starts ramping up again. And of course, Ed is frequently a panelist and host on IBD Live. So if you haven't checked that out at investors.com/IBD Live, it's a great show. I will be hosting on Monday. We had a slew of guests, including George Kachuk, Mark Minervini, both of whom have won U.S. investing championships, and then also David Keller from Sierra Alpha Research this week. So it was a pretty jam-packed guest week, as well as our typical guest, David Ryan, who it shows up every Tuesday. He, of course, was a William O'Neill protege and three-time U.S. investing championship winner, I think back to back, if I'm not mistaken, a three-peat of years back in the 80s. Ed and I can be found on that show, as well as the Stock Market Today video after the close. So hope you join us next week. And again, thanks a lot, Ed, and we will see you all next week. Have a great weekend, everybody.